Listed shopping centre fund Hyprop posted a 9.4% improvement in its distribution to 198 cents per unit. That's for the 6 months to June. Hyprop advanced its strategy of growing its asset base with the approval of the Rosebank Mall redevelopment and by expansion into Africa. Vacancy levels within the group were lower at 3.8%, while net borrowings at year-end totaled 5 billion rand. Earlier, Tumisho Maganyele caught up with Hyprop CEO Pieter Prinsloo for more on their first half earnings.
We're quite pleased with our results. When we started the beginning of the year, we didn't foresee that the trading conditions is going to be or remain so positive in South Africa, and clearly our shopping centres benefited from it. So operationally, the company has done quite well, especially at our large and super large regional malls. And as I said, vacancies we've kept down. There's quite a good demand from tenants to take up more occupation in their centres, and that's obviously meant that financially those centres has performed quite strongly during this period.
Now, you mentioned that you have lower vacancies. Now, how do you see the vacancy rates going forward? I mean, what would be the trend that we can see, for example, in the next 6 months?
Yes, I think for the rest of this year the vacancy should remain low. It is pretty low at the moment. As I say, most of our large shopping centres are actually fully let, or it's got very little vacancy. We've got a bit of vacancy in our office portfolio and some in our what we call the value centres. That's a bigger box type shopping centres. There we still have some vacancies, and one of the focus areas there is obviously to reduce the vacancies there. At our larger centres, we are focusing to look at expanding those malls, especially some of our large national tenants are quite keen to increase their footprint. You know, tenants like the Woolworths and Edgars, they would like to take bigger space, and that gives us the opportunity to focus on expansions into the portfolio as well.
Now, just looking at your expansion is obviously one of your plans, but I'd like just to move it to one of your strategy. Would it be selling off some of your core assets? The moment you said South Coast Mall has been sold off, I mean, would you like to maybe give us a bit of deeper understanding as to, what would constitute as your non-core assets?
Yes, yeah, certainly we've got a very focused strategy there. We want to be invested in large premium quality shopping centres, and those centres that doesn't make that kind of grade, we over time would like to trade out of them. Non-core at this point in time, I would classify it as standalone office parks, because we're very, as I said, very focused on ownership in shopping centres. So those office parks that's still in a portfolio, over time we would like to sell them off. There are some smaller retail assets, standalone value type assets that doesn't really fit the profile of the company, would like to dispose of those as well. And then also we had some non-direct investments up to now, indirect stakes in other listed property companies, and we've sold some of them now, and the only significant one that still remain is our stake in Cycom. Again, we classified it as non-core, so over time we would like to see how we can realize that asset as well.
750 million has been earmarked to go towards expansion projects into Africa. Won't you tell us about what are some of the countries that Hyprop is looking into going into?
Again, it does fit our strategy of ownership in quality dominant shopping centres, and that strategy we would like to carry to investments elsewhere in Africa as well. Countries most likely we would focus at this point in time is Ghana. It does present us with some nice development opportunities there. We've got an interest in an existing mall, the Accra Mall, which is very successful, and based on that it does give us a springboard to do further developments in that country. Our co-investors, the Atterbury Group, has identified some very well-located sites, and the focus there is going to be to develop both shopping centres, and we see exceptionally good opportunities there.